Welcome to this comprehensive guide on the buy and hold strategy, one of the most fundamental approaches to long-term investing. This investment philosophy has helped countless investors build substantial wealth over decades. Throughout this presentation, you'll learn the core principles, benefits, and practical implementation of this time-tested strategy. Buy and hold is a passive investment strategy where investors purchase stocks, bonds, or other securities and hold them for an extended period, regardless of market fluctuations. The key idea is simple. Instead of trying to time the market by buying low and selling high repeatedly, investors commit to staying invested through both good times and bad. This approach believes that markets generally trend upward over long periods, despite short-term volatility. Rather than reacting to daily market movements, buy and hold investors focus on the long-term growth potential of their investments. The buy and hold strategy rests on four fundamental principles. First, time in the market is more important than timing the market. Research consistently shows that staying invested outperforms attempting to predict market movements. Second, compound growth is your greatest ally. When returns are reinvested, they generate their own returns, creating exponential wealth accumulation over time. Third, reducing costs is essential. By minimizing trading frequency, investors save on transaction fees, commissions, and capital gains taxes. Finally, patience wins the game. Successful buy and hold investors ignore short-term volatility and resist the urge to make emotional decisions based on temporary market swings. Historical data strongly supports the buy and hold approach. The S&P 500 index has delivered an average annual return of approximately 10% over the past several decades. Even more compelling, historical analysis shows that investors who held their positions for any 20-year period have experienced positive returns 100% of the time. This means that despite crashes, recessions, and bear markets, patient long-term investors have consistently been rewarded. These statistics demonstrate that while short-term market movements are unpredictable, the long-term trajectory has been reliably upward. The buy and hold strategy offers three major advantages. First, lower costs make a significant difference to your returns. By trading infrequently, investors minimize transaction fees and, more importantly, reduce capital gains taxes, which can erode returns substantially. Second, less stress improves decision-making quality. Buy and hold investors don't need to constantly monitor markets or make stressful timing decisions. This psychological benefit cannot be overstated, as emotional decisions often lead to poor investment outcomes. Third, simplicity makes this strategy accessible to everyone. Buy and hold is easy to understand and implement, requiring no complex analysis or sophisticated trading strategies. Certain asset types are particularly well-suited for the buy and hold approach. Index funds provide diversified, low-cost exposure to entire markets, making them ideal for passive investors. Blue-chip stocks represent established companies with proven track records, strong competitive advantages, and reliable performance over decades. Dividend stocks offer the dual benefit of regular income through dividend payments plus long-term capital appreciation potential. Real estate, whether physical property or real estate investment trusts, provides tangible assets that historically appreciate in value while potentially generating rental income. These asset classes share common characteristics: fundamental strength, proven resilience, and long-term growth potential. While buy and hold is conceptually simple, it presents real psychological challenges. Emotional discipline is perhaps the greatest hurdle. During market downturns, when portfolio values drop significantly, the temptation to sell and stop the pain can be overwhelming. Resisting this panic requires tremendous discipline. Patience is equally demanding. Unlike active trading, which can feel exciting and engaging, buy and hold requires waiting years or even decades to see the full benefits of your strategy. This can test even the most committed investors. Market volatility itself can be unnerving. Watching your portfolio value swing dramatically from month to month, or even day to day, requires mental fortitude and conviction in your long-term strategy. While buy and hold emphasizes long-term holding, there are legitimate reasons to sell. First, when financial goals are reached, such as retirement or a major life milestone like buying a home, it makes sense to liquidate investments to fund those objectives. Second, fundamental changes in a company's business model or competitive position may warrant selling. If the original investment thesis no longer holds true because the company's prospects have genuinely deteriorated, holding indefinitely may not be wise. Third, portfolio rebalancing is necessary to maintain your target asset allocation. As some investments grow faster than others, your portfolio can become unbalanced, increasing risk. Periodic rebalancing by selling overweighted positions and buying underweighted ones maintains your desired risk profile. Implementing a buy and hold strategy involves 4 key steps. First, define your investment goals and timeframe clearly. Are you investing for retirement in 30 years or a house down payment in 10? Your timeline dramatically affects appropriate asset choices and risk tolerance. Second, research quality assets thoroughly before purchasing. While buy and hold doesn't require constant monitoring, it does require careful initial selection of fundamentally sound investments. Third, diversify across sectors and asset classes to reduce risk. Don't concentrate your entire portfolio in one industry or investment type. Fourth, review your portfolio annually, not daily or weekly. An annual check-in is sufficient to ensure your investments remain aligned with your goals and to perform any necessary rebalancing. As the saying goes, time in the market beats timing the market. This wisdom encapsulates the entire buy and hold philosophy. The strategy has proven itself over decades and across market cycles as an effective method for building long-term wealth. Success requires 3 essential qualities: patience to hold through volatility, discipline to resist emotional reactions, and consistent investment in quality assets. While it may lack the excitement of active trading, buy and hold offers something far more valuable: a reliable, stress-free path to financial security. Remember, investing is not about getting rich quickly. It's about getting rich slowly and surely through the power of compounding returns over time.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.